Warren Buffett is an investor that does not need introduction, but there is another billionaire investor, someone who is worth more than $40 billion, who is now buying some of the stocks within Warren Buffett's portfolio. That means there is someone else starting to look at Warren Buffett and say, hey, I also want to buy some of these stocks. It is double confirmation for people like us. And what we know is when these billionaire investors start to buy, they move the market, which means people like us might want to start paying attention and ride the wave. So, who is this person and what are these stocks? And does it make sense to add this to our Christmas shopping list? Let's go ahead and break it down. Look, it's the holiday season. I'm not changing my turtleneck. You can only take off a turtleneck but once or twice, because then you're going to stretch out the neck, okay? So I'm sticking with it, all right? It is what it is. But the person is Ken Griffin. If that name sounds familiar, he's the person in charge of Citadel, the Citadel Group. I'm not going to get into the whole thing. Look that up, plus Robin Hood, okay? It wasn't great. Hedge fund managers generally don't have a great reputation. What I can tell you is the man is good at making money. He is generally quite good at investing. So is Warren Buffett. However, of all the stocks he owns, in Q3, keyword in Q3, he started to buy up even more stocks, and there is an overlap between what he and Warren Buffett are owning. And there is even more overlap here. I'm going to give you just a little bit of background before jumping into it because this is important. Remember the video I did a few months ago, this one right here, where I said billionaire investors were investing in energy companies. What did we start seeing? Right, we saw companies like NRG, companies like Target Resources Group. We started seeing energy companies do quite well. Those billionaire investors started to move the market, and if you were paying attention and you watched that video, you started investing in those stocks back then, you probably made money. Ta-da! Look at that, okay? Now we're starting to see this again. And last week I did another video giving you an idea of where you might want to consider investing in 2025. You're going to see one of those areas pop up here. So let's start with some of those stocks. The first one is Capital One. The stock symbol is COF. I'm also going to give you this caveat too. I'm going to give you my regular spiel about some of these stocks and also give you last 6 months and last year. That is my normal process, and I think it's important to go through my normal process of what I normally do. But he bought these in Q3, so I'm going to give you how well it did over the last 3 months just to give you context, because there are some stocks that I'm like, I wouldn't buy that. But he just bought it in Q3. He didn't buy it a year ago. He didn't buy it 6 months ago. Okay. Also, for context, as I'm getting into it, the S&P 500 in the last 3 months is up 7%. So that's the bar, just to give you like what's good and what's bad. All right. Now, Capital One is in talks, or they did announce, and perhaps you forgot, in a merger, trying to merge with Discover, and he added 483% more Capital One shares. And obviously, again, this is a stock that Warren Buffett does own. So interesting here. Capital One, again, the stock symbol, I said it earlier, is COF. I didn't repeat it earlier. It is up 32% in the last 6 months and up 38% over the last year. Very good. But just in the last 3 months, basically a quarter, it is up 24%. That is very good for just 3 months. Okay, obviously, of course, not over. The day that he bought it, all that kind of stuff, the performance can be different. Okay, we get that. But in just 3 months from the time that we're doing this video, it is up about 24%, which is very, very good. We expect in 2025, at least for the first half, that the market will continue to do well. That's obviously not a guarantee, but finance, I told you in last week's video, I expect that to do well. Again, not a guarantee, but we expect the Fed to continue to clear the way, at least in terms of interest rates. The next one here is the most interesting one here for me, but I guess it does check out. Charter Communications, CHTR. Up 27% in the last 6 months. That's okay. But this one is down 5% in the last year. This is not a company that I initially would have put on a list. This is not a company that I would be interested in buying until I looked at the research and said, oh wait, he bought this in Q3, so he hadn't owned it that entire time. If you look at the last 3 months, it is up 9%, which is more than what the S&P 500 is up in that same time frame. So perhaps, I don't know, I don't have enough data to expect or think that that trend is going to continue. We'll see. Right now, today, if you were to ask me, is Charter Communication the absolute best communication stock that you could own? I would say no. But I am also not worth $40 billion. Okay? Warren Buffett owns it, and he is obviously a better investor than me. Ken Griffin just owned it. Ken Griffin. That sounds, I was thinking of a baseball player. Y'all get the point. But he owns it, and he's obviously a better investor than me. So you take that for what you want. But in my mind, I would have an alternative. I'll talk those alternatives at the end of the video. Next, another finance stock. Look at that. I wonder why all these billionaire investors are investing in finance stocks. Perhaps they are thinking about 2025. Maybe. I don't know. I haven't talked to them. I don't know. They ain't got my number. I ain't got their number. Okay? But maybe, again, we've talked about this before, you only buy things that you assume are going up. All right? They're not in the business of losing money, and neither am I. All right? That's one thing we do have in common. But Citigroup, the stock symbol is C, up 9% in the last 6 months. Not impressed by that at all, but it is up 38% over the last year, which is more impressive. This is perhaps even more impressive. Remember, the S&P 500 is only up 7% in 3 months. Citi is up 18% in the last 3 months. That is very good. That is very good. He apparently picked up this stock at the perfect time, and we'll see what it is going to do rolling into the next year. So that one might be the one to pick up as we're moving forward. Guess who told you that? I don't know. Looking at banks. Now I prefer the regional banks right now, but picking up banks might be the time to do that. I might not be the only one that is talking about that. Anyway, looking here again, MasterCard, the stock symbol there is MA. Now, Capital One is somewhat of a regional bank, but also a credit card, who is also buying Discover, trying to buy Discover, which is also a credit card, and I'll circle back to that one because that's an interesting thing there too. MasterCard is up 18% in the last 6 months, up 23% over the last year. However, in the last 3 months, it is tied, virtually tied, very close to being tied with the S&P 500, with being up 7% over the last year. Now, circling back real quick to Capital One. Now, we talked about this a long time ago about Capital One and Discover merging. Now, I am curious. I would need to look more into this if I'm more interested in Capital One, or if you are more interested in this Capital One thing, let me know and we can talk about it. I also did an older video about it. Here, I'll link to it. We can talk about it. But I'm curious to A, what is the status of this merger and where is it? And then 2, I would expect that the incoming administration and the people that he picked would be more generous and more lax to mergers and acquisitions. They tend to be more corporate friendly. Now, is that good for consumers? Probably not. We'll see. So I don't know, but I would expect them to not pursue Google, because Google is in a monopoly case. And I wonder if they would just say, hey, don't worry, y'all can merge, and this may help Capital One. I don't know. Him buying it, I wonder, I'm guessing here, this is a guess, an educated guess, but it's a guess. I'm wondering if that's a sign of him thinking that, and that's what's going to help Capital One. I do not know, but I wonder, him buying it in Q3, perhaps he is hearing or thinking something. But again, that is a guess, and that's me stretching this guess out. I don't know that. Okay, so do more research into it. I can do more research into it if you let me know in the comments, then we can do that. All right. Now, what are the lessons that we can learn from all of this? It is only 4 stocks. It is only 4. So don't take this and go to the mountain and write it on a stone tablet. Okay, don't do that. But between this and the information that we're seeing in the stock market right now, we can say that the finance area as a whole, from what we have right now, might be the place that we want to go from right now. Now, should you put all of your money in finance stocks? No. And remember, there are different sectors of finance once you dig into it. You got fintech, like a PayPal, though I'm not the biggest fan of PayPal. You got the credit card companies, then you've got the bank companies, and you've got little pockets in between, including insurance. So there are different pockets within it, some doing better than others. But you may want to consider looking into that space. I think perhaps insurance is the quote-unquote safest, okay, air quotes. The stock market does have risk regardless of where you are, but insurance might be the, I'll put it in air quotes again, safest area to be, because there are still some risk moving into 2025 with all the stuff that we've talked about before. And then communications. Now, again, it's only 4 stocks, so again, don't take it to the mountain. But he put some money in there. Again, I'm not the biggest fan of Charter. Maybe I did do my own research. He's a better investor than me. But I'm a bigger fan of Netflix, which does count, yes, as an entertainment company, but that does, in some, depending on what filter you're looking at, what ETF, some people do consider Netflix a communication company. I would look at Fox. Now, I'll put an asterisk on Fox. There was a lawsuit that we did talk about. When I first brought up Fox earlier this year, I told you guys about the family drama lawsuit and what that's doing with Fox. That may change how we feel about Fox moving forward. We'll see, okay? But I did bring that up the very first time several months ago when we talked about Fox. So I'll need to go back and revise and see how I feel about Fox. But between those two, I would have preferred Fox over Charter. Maybe we'll see where that is moving forward. However, if you want to go back and review other areas that you may want to consider investing in, what might be a great place or great places to invest, especially moving into 2025, then this is the video that you want to watch next.